Good morning or good afternoon for those of you on the right coast. Good morning out here on the left coast. This is the Trading Wife on BTFD TV, and I want to thank the BTFD TV for supplying this venue so that we can do these regular shows. They've been really great, and I think we've had a lot of great turnout from you guys watching them. Oh, I'm hearing music. I have no idea what that is from. Do you hear that? Okay.
No, I don't hear you.
Okay, not sure what that was. Whoa. Okay, I see the problem. All fixed now. So here we are. Sorry about that. And I have Ryan Mallory from Share Planner joining me today. Real quick, let me just let you guys know my website is www.thetradingwife.net. You can follow me on Twitter at TheTradingWife. Send me an email, thetradingwife@gmail.com. And without further ado, let me introduce Ryan from Share Planner. Hi, Ryan. How you doing?
Hey, I'm doing great. Thanks for having me.
Awesome. Glad to have you here. If you want to go ahead and tell folks a little bit about yourself and give your website address and what you do. And Ryan and I met.
Yeah, so
Go ahead.
No, I see. We probably met probably like 3-4 years ago. I would probably say
at least,
maybe
yeah.
even further back.
Yeah.
And we've been able to keep in touch ever since. And you know, I started a website about, I guess it's almost like 8 years now. 8 years in October, I guess it'll be. Shareplanner.com, and it's a swing trading website, and you know, I provide, you know, the real-time swing trade alerts and the chat room, and etc. And yeah, just getting market these days.
Indeed, and in fact, that's something that we were talking about before the show started here. Is what a crazy market it's been with the crazy whipsaw action that we've been seeing, where it's, you know, looks like it's going to rally for a couple days and then it turns, and then it goes down for a couple days and then it turns, and that's been a really tough environment for swing traders.
Right. And so, like, what a lot of traders will do, we excuse me, in
No
good
worries.
markets, we always like to tout risk management because we think that we all have great risk management in good markets. When it's trending up and we're always long and we're rarely getting stopped out, yeah, we like to tout how we take losses on, you know, a couple positions here and a couple positions there, but when you get into these choppy whipsaw markets, this is a time where you see a lot of traders abandon their risk principles, and that's really, these are the kind of markets where a lot of people take some exorbitant kinds of losses, and that's where, in these kinds of markets where you are constantly seeing false breakouts, false breakdowns, and constant whipsaw back and forth, where you got to be sticking to those risk principles more than ever, because that's when sticking to risk management principles that you have already laid in place prior to this kind of market action becomes absolutely critical. And it's also sometimes the most painful too, because you feel like you're getting erroneously stopped out and everything else. But if you stick to those principles during these times, you're going to survive and be ready for when the market does start trending in one direction or the other.
I think that's such a great point, and I think that a lot of traders don't realize that sometimes you don't make money, and that it's okay not to make money if you're not losing a lot of money, because you're absolutely right. This is when traders will start to put more risk on because they feel that need, that desire to make money, and instead they end up losing a lot of money rather than really mitigating that risk. And, you know, maybe we're staying, I know you and I were talking about this earlier, close to break even, not really making a lot of money this year, but that would be a whole lot better than losing 20%, which I have seen traders do, and even, you know, some of the folks who tout themselves as being experts and mentors, and they do it too. They lose that risk mitigation and start to blow up because they're putting too much risk on and feeling that need to perform. And I think especially for some of the folks who are you know, online and touting themselves as being trading mentors, and they feel that need to perform for their followers. Like, I have to be making a lot of money all the time. But the fact is, you're a lot better off if you're sometimes not making money rather than losing money.
Right.
And like you said, surviving for that next time when the market is conducive to making money again.
Yeah, because you know, if you wait, if you can wait some of these periods and stay, you know, keep your you know, head above water and everything, when the market finally does break out, you're not going to be trying to dig your, you know, way out of a hole. You're not, or climb your way out of a hole that you dug for yourself. Instead, you'll be adding to your portfolio and increasing your profits. But like what a lot of traders do is that during these markets where the market is real choppy like it is, they just keep digging themselves a hole and digging themselves a hole, and then they start taking bigger risks. And if they haven't blown their accounts out by the time the market does start trending in a direction, what they end up doing is they're spending the entire move just trying to get back to where they were at. So you know, that's the biggest problem. So yeah, and then things about like the mentors where they feel like they gotta, you know, keep their insane promises of, you know, making, you know, X amount of dollars every day guaranteed or whatever.
Yeah.
They're having to completely abandon risk principles in hopes of hitting a home run for their members, and that's just complete lunacy. So.
And I've seen some of them like saying, "Oh, I've lost 30% this year," and, you know, you're thinking, "What are you doing?" Right? How can you lead people?
I'm closing up shop if that happens.
Right? Because it's you know, not fair to people who are trusting you to lead them in the right direction. And unfortunately for swing traders, so far this year, the right direction is if you can stay flat, you're doing well, right? Because the market hasn't moved much either. Yeah. So it's not like we're underperforming the market. I mean, the market's not moving either.
No, it's not. I mean, I was looking at it yesterday, and basically there's like a top closing price of 2.8% above where we closed the year at, and then there's like a you know, there's like a range of 3.3% below where we started the year out. So really there's like a 6% range, and it's not like it's been trending higher 6%. It's like cut in half, you know, 3% above, 3% below, and that's like the perfect definition of a choppy market. Is just, you know, all over the place. And those extremes of range, I mean, really the range has been even tighter than that, like, you know, 1% above, 1% below, and it's just, you know, vacillating back and forth between that kind of a band.
Yeah. And you know, as you know, and as a lot of my followers know, I use what I call my market timer, which I'd gotten from my friend Danny, the idea. But now basically I analyze the market as a whole before deciding whether to go long or short the market. So when my timer's green, I would go long the market. I don't tend to go short during red daily timer when the overall market is still bullish, if you know what I mean. You know, like you have Dow theory will tell you that there's an overall trend and then there's smaller trends within it. So my timer goes red or green on the daily trend, but if you look at the weekly chart, obviously the market's not going down. So the market on a whole on a weekly chart never really hasn't been bearish for a few years. But the chop on the daily has just, like you said, that 3%. And I think it's actually been consolidating to a smaller range. At some point, something's got to give, right? Because it's coiling like a rubber band, and that rubber band's going to have to snap back. But my timer has been turning red to green to red to green every few days, so it's been really crazy to try and catch that and have it keep going, because the signals aren't holding. They're reversing after a couple of days, so those patterns aren't holding. We can take a look at that actually on the SPY, and would love to hear your comments. I can hold this out a bit, and we can see that, you know, here. Let's just look at just this year. So there's, you know, January, beginning of the year. Here's the last day of the year over here, 31st, closed at 205.54. You can see where this line is. I'll go ahead and put that in there. Actually, 205.54, right about there. And I mean, you can see like we've vacillated up and down and through it multiple times. Do I have that in the right spot? 205. Down a little bit more.
Pretty close.
Pretty close.
It's always hard to get it right
it
exactly on
is.
the chart.
But I mean, you can see like we had a hard time even getting above that in the first month of the year. We were just down. And then finally in February, it started to go above, and then it came back down and went below it. And then it started to go above and came back down and went below it. And what's interesting is I have this other line of support here. And this is a very good example of what I call a mattress of support. Mattresses of support or mattresses of resistance, because they tend to be in ranges. So this is like a mattress of support. It has these two lines here, the upper line being the closing price of the year. And we have really struggled to get anywhere above it, like you said, vacillating 1%, 2%, 3% the whole time, the whole year, and not really moving anywhere, not getting above this top line, which is that range that it's been in since February, since it finally started to go up in February, and it looked like it was going to continue making new highs, but just lost that completely. Any charts you'd like to look at?
Well, what's interesting. Yeah, well, right there on the SPY, it's one of the things that sticks out to me right now is how you have a a head and shoulders pattern playing out there, going back to about mid-April there or so. Maybe if you look at it, it's not the most defined pattern, but you can see where.
So you're saying this is your head, right?
Right. And then,
so it's funny because
yeah,
it's funny because we had to talk about this. You remember Sylvan, JJ?
Yeah.
So he hangs out in my chat room. And he was just pointing this out, actually, that he was seeing this head and shoulders. And yesterday I thought it was pretty, where you really see it, I think, is when you look at the hourly chart.
Mm-hmm.
I've got these lines still
in
here. I can take that out. But here, you really see it here, right? Like there's your head, and here's your left shoulder and your right shoulder. And then you have this very clear neckline down here, which we had lost. But then now we're back up through the neckline on the hourly chart. So it'll be interesting to see how that plays out when we look at it on the daily chart. See, we had lost that yesterday.
Clearly trying to rally a little bit today.
Right. So that neckline, right, because there's your head and your left shoulder and your right shoulder. So that neckline was lost yesterday, and now we've popped back up through it. And the other thing that is so interesting too, and this is also, I think, so proof of a range here, is look at these moving averages. How they are so tight together, right? The 50's in there, my ADMA's in there. There's just a bunch of moving averages in here that are so coiled and tight, and that's indicative of the fact that the market just hasn't moved. It's just been in such a tight range and getting tighter.
Yeah, and it's impressive when you have that many moving averages just basically right on top of each other like that, and it, like you said, it's very indicative of the fact that the market's extremely range bound and really lacks a direction. And even with today's bounce, and it was sort of getting forecasted yesterday when you could see the buying at the end of the day, because it was very synonymous with the two previous sellbacks, the one on the 17th of April and again on the one on the 30th of April, where you had a huge down day, but then towards like the last hour of trading or so, you had significant buying that came online there.
Yeah.
In each instance, there was a big pop the following day. So like on Tuesday when we sold off, I didn't cover any of my short positions because there just was no buying that came in at the end of the day. But then on yesterday, I had that bearish ETF, on the S&P 500 SDS, and I had got them long on that. I think it was 2046 a couple of days ago, and so when I started seeing that buying come online towards the end of the day, it was like around 3:50 p.m. on the East Coast. I went ahead and closed out that position, and just because you saw that buying come online. You've seen it in previous two sell-offs where the buying comes up in the late afternoon, and then you have this huge
Right.
bounce the next day. So I didn't know if we would have a 20 or 25 point bounce today or whatever. But I
Sure.
knew for one thing, I didn't want to risk a position that was a leveraged ETF overnight on signs that the market might bounce today.
Right, absolutely. And what's interesting is even looking at this ETF that you were trading, you can see like it's just not moving, right? I mean, you get a little bit of, I think you got pennies on your dollar there, right? In gains, at least you got gains. But it starts to go in one direction, and then it put in this sort of morning star candle here and started to go the other direction, right? So and there's the SPY doing exactly the opposite, right? So I think obviously you did the right thing to get out at that point. Interestingly, the 2 days that you mentioned as being the big sell-off days, the 17th and then the 30th, those are the days that created that neckline. Because they created that bottom line there. So there's that neckline that we had lost yesterday, and now we're rallying back up through. It'll be interesting to see if we can get through those moving averages today.
Yeah. I mean, right now as we speak, the market's hitting new highs on the day, so it's up about 10 points a day. It's 0.5%, but a lot of these bounces that we saw, and there's still a lot of time left in the day.
Right.
Usually it was like rallying like 20, 23 points or so, if I remember correctly.
Right.
So
Right.
I have to see if it does something similar to that.
Yeah. Again, the whipsaw action, and when the market rallies that much, like that turns my timer green, because that says there's buyers in the market, right? When there's enough of them that it actually negates a previous day's selling. If not, then maybe not necessarily. I'll look at that as an overall picture. At the moment, it's just sort of looking like a dead cat bounce, but it's got so much strength and volume behind it that you think it's still pretty early in the day. What's it going to do, for the rest of the day? And it could easily, put in the kind of candle that negates the timer turning red and turn it back to green again. And this is exactly, that whipsaw that we've been seeing, that red to green, red to green. Do you want to talk a little bit more about your strategy? And are you only swing trading now, or?
Yeah, I'm swing trading. That's always the thing that has always worked most consistently, best for me. It's always been my bread and butter, so I've always stuck to that over the years. And that's what works for me. I'm not really good at anything else, I guess you could say. I mean, I can do day trading and all of that stuff, but I like my focus being on the swing trading, because if you compare the two, that's where I make my money at. So I tend to prefer the things that work the best for me, and focus solely on those things. Now, one thing too that's probably worth pulling up too is the VIX chart, VIX. That thing has really been interesting, because there is some very clear of resistance overhead that has been struggling with. So if you zoom out a little bit on it, yeah, you already know what I'm talking about.
I've been trading
line
this.
already.
I mean, yeah, I've been I don't know if you remember, but I was always a fan of shorting volatility. I'm sure you remember, because it also played into how you do your options volatility sell as well. Always been a fan of selling volatility, so I actually got stuck. So I used to say only short VXX, because you have the decay and the contango and so forth in your favor, because it's all based on options, and those will expire and those will decay, etc. So I always used to say shorting VXX was a better trade than going long the inverse XIV. But at one point, when there was such low volatility in the market, I had noticed a year or two ago that XIV was keeping pace to the upside with VXX going down, and a lot of people don't have the ability to short. So I started getting in XIV long, and then when all that volatility came in the market, that changed, and XIV started really suffering the decay because it was going the wrong direction, which was really interesting. But because I knew that volatility would eventually collapse, I held on. So that's one of the few times that I will hold on to a position that's in the red, and because I know it will come back, and it did. And I've taken small bits off for 15, 14%, something like that. But I'm currently again are still in some XIV, and then I added some yesterday when, like you said, that buying was coming in at the end of the day, and it looked like it was going to flip. So the XIV is actually the bear ETF on this VXX. So yeah, so I've been watching this, like you said, this trend line that it can't get above, right? So volatility has continued to shrink, right there.
Mm-hmm.
So volatility has continued to shrink, and then I've been trading this, and it's been the one winner that we've all been able to have, because at least there's some consistency to its pattern and so forth. And even when market has down days, as the sideways action actually is low volatility. Well, it's hard to trade that chop because it's going sideways, but it's actually low volatility. So I've been taking some off up in here as it was topping out, and then I added some yesterday at the end of the day in there. So yeah, really. Go ahead.
Well, what I was going to say is that the on the bottom side too, it gets towards that bottom range, and it's not been as clean as it has been in recent months, but it starts getting towards that like 12.15 or 12 to 12.15 area.
Mm-hmm.
You can't get any more traction in the market. The market stalls out every time it touches that area, and so there's a clear level of support as well for the VIX. And what's getting more difficult, especially from that February to current time here, is that range is dramatically tightening to where there's really no movement among the market on a day-to-day basis outside of one day up a lot, one day down a lot, and vice versa.
Right. The interesting thing about this VIX chart is this is really starting to look like a descending triangle, with the top line coming down and the bottom line being flat, and that in a regular technical analysis charting world, that would lend to the idea that it will lose that bottom line and break down out of that. Interestingly, one of the things I've been pointing out about the SPY is that it's been in sort of this, maybe it's not quite as much now, because no, it still is. See, it's got this ascending triangle, even though it's not as dramatic as that VIX, but there's definitely an ascending triangle in here with more of a flat line and a rising bottom, which is consolidating that as well. In the real world, it should pop out of that to the upside, but the closer it gets to that apex, the less opportunity it has to do that. The more chance it will break down instead of up, or not follow the pattern.
Yeah.
So yeah, I thought we had a good chance yesterday when Janet Yellen was going to speak, and then she gave her speech, and her speech was perfectly dovish as usual, and then I guess she sat down in conversation with Christine Lagarde and said something to the effect of equity valuations are high, even though she followed that up with, but bond valuations are higher. And historically, equity valuations are in a normal range. They're not like beyond historic highs. They're actually, relatively normal for their valuations. But the media took that one line, equity markets are high, and they, of course, like they always do, because we love drama, and they spread that. It started, at first one I saw was Zero Hedge, and then it started spreading to all the different news outlets, and that's when we really started to see that sell off yesterday.
Yeah, and that's always an irritation to me is the Fed. I mean, and it doesn't matter if they say something that's favorable for my positions or not. It's just the fact that she knows what her comments does to the market and everything else. So she seems like she has her comments about the social media stocks and now equities being overvalued. It seems like she doesn't really think as much before she talks, not realizing the effect that it might have on the market, and so as a result, you get these crazy movements in the charts off of her stocks. I mean, really, Federal Reserve shouldn't be too much concerned about the equity markets. They should be more concerned with I think they're one of their what do you call it? Objectives is to monitor the employment issues in the market,
Right.
and along with like interest rates and other things too. But I don't see where giving her opinion on the social media industry of stocks has anything to do with her job title. So
Right. No, I mean,
maybe she should start a blog like Bernanke.
I think that there's probably something to do with, manipulating the market, wanting to pull it in, wanting to not let it go much higher. Supposedly, she was talking about, overall financial risk, and she was saying that there was basically saying there's some risk in the equity markets. Well, duh, right? Like, there's always some risk in the equity markets, but there's more risk in the bond market, and she actually followed up with that. But I don't know if she did it on purpose or if she, really didn't know what she was saying or how it was going to affect the markets. It's hard to say. I think my first reaction was that it was a mistake, but afterwards I wondered. I was talking to my husband about it, and as you might remember, he's a fundamental guy, and used to work on Wall Street. Now he works in industry, but he was saying that he thinks that it was on purpose. So I think that that's an interesting possibility to consider.
Yeah, and that's the thing. It's like I like a pure market. It's not completely just hinged on whether
manipulated. Yeah.
Janet Yellen thinks one thing. Yeah, I just feel like it. Yeah, and that gets you quite frustrated because it's sort of like Herbalife, HLF. There's a reason why I don't trade that stock, because you're not really trading off a technical analysis. You're trading off of what two people think of the stock and which opinion's prevailing that day.
So true.
And,
so true.
I'm not going to trade it because I'm going to get burned.
Yeah, I mean, I agree with you, and I think that we've seen a lot of that of late with a lot of these, now that because we have all the social media and these big famous people will go and tweet that they've shorted something or gone long something. And how is that legal? Because they have enough of a pull to move the stock. And okay, I've gone short. I'm Carl Icahn, and I've gone short XXY. And I'm going to tweet that. And oh, look, it's tanking, and now it just made millions of dollars. How is that legal? I don't know. I don't think they can figure out a way, to regulate that. Like, they just have to go with it because there's only so much you can do, right? He's disclosing his position, but he's reaching such a larger group of people and investors that it's actually affecting the stock. Whereas normally, in the old days, he would have disclosed it to whoever he had to disclose that to, and maybe some analysts would have written about it a day or two later, but it wouldn't have been so immediate, like on Twitter, the way it is now.
He's got a good trading strategy going there. Buy a stock and tweet it out to millions of people and get it on CNBC and Fox Business and watch all the buyers flood into it. So.
No kidding.
Nice.
So I did get a request for a chart here, and I haven't looked at any charts. So happy to have your input on these charts as well, because you are also a wonderful chartist and technical analyst. And so this DTV was a request from Lance in the chat room. Bullish engulfing today. Clearly, I need to put on my glasses. I don't know about you, but I can't see a thing close up without glasses anymore. My age is showing itself there. Nice bullish engulfing candle below my ADMA line. For those who follow me, they know that the ADMA is my trigger line, coined by Rick Sadler when he was a student of Stephen Bigelow's, and I learned it from Stephen Bigelow. It's this red moving average here. Stocks tend to move up when they're above the ADMA, and they tend to move down when they're below the ADMA. Of course, with the chop of late, they've been chopping through, in and up and down through it for a while. It's making that hard to use as a good indicator. But for the moment, certainly this is looking like it wants to come back. Do you have any comments on that? Would you like me to zoom in on that, or?
Yeah, zoom out a little bit if you can. If you can go back to like August of last year or like late July of last year, there's it's kind of interesting.
Oh, look at that.
You see old green spike back in July.
Oh yeah, look at that. This one right here.
Yeah, so
Looks
if you
like
take
actually
a yes,
bearish belt
there's a
hold
huge
type
support
candle.
level right there. Yeah, yeah. So I mean, if you take a line and you just draw it off the top of that, and you just sort of connect across, it's not the cleanest of support levels, but there is somewhat of, yeah, like that. You see where it's tested that level, and you can see
Yep.
where that pullback today is. It's kind of testing it right now, and and so it's staying above it, but it's definitely a support level I'd say is worth watching here, and
Absolutely.
um,
Absolutely, I agree with you. I see how
so
this candle that popped up, I don't know if that was earnings, definitely, opened at that exact level. And interestingly, that candle from back in July, hold on, see if I can get back to there again. That is what we call a bearish belt hold candle. And the reason is that it opened outside of its normal range and then came back to the range. When it's a bullish belt hold candle, it normally opens down outside of the range and then comes back to the range. In this case, it was a bearish belt hold candle that opened high and then came back into the range, and then it went down from there. So that confirmed. But interestingly, that definitely created, as you said, a huge area of resistance, which is now support. So you can see that resistance line continued, right? Like that definitely created a line of resistance that held strong for almost a 6-8 months, right? And then and then popped through it and is now using that perfect example of resistance that becomes support.
Mm-hmm.
Cool, very cool.
Yeah. So
definitely worth watching.
What that does is that I can't tell just by eyeballing it. Let me see here. There may be. Yeah. So it's not entirely a clean trend line, but if you take like the lows there off of April 2015, this month here, or I'm sorry, last month, and you draw a trend line off of those, I mean, there's a little bit of a trend line that it's also come back to a little bit there. It's not
a great
it's not
one,
entirely clean, but
yep. No, but I definitely see that.
But what you have though there is just like using the lows of today, you have basically a pretty interesting place to where you can put a stop loss below, and it keeps it pretty tight, and then you can see, okay, can it get back up to like $92, $93 a share?
It also has the 50-day moving average just below, so that's also nice support there, and you can see that it held that as support. It was using that as resistance here and then support here. So some stocks definitely adhere to those moving averages better than others. This one clearly uses that 50, so I think that 50 also lends to these other support lines that you've pointed out as well. So multiple levels of support there. But still below the T line, but with that bullish engulfing and that easy risk reward, I think it's worth trying. Certainly, market timer is currently red, so it would depend on somebody's trading strategy. But okay, Lance says he's looking at DTV on the hourly chart, so we'll go ahead and take a look at that. Ooh, nicely curved there. Nicely curved through the T line on the hourly chart. Has the 200-hour acting as support within those same support levels. So yeah, it has a lot of potential there, I think, Lance. If you wanted to try that, I think that would be a fairly easy risk-reward trade.
Yeah, and watch some of it. I don't think it's really a major resistance level on the hourly there, but there's some maybe like around that 89.70 level. You might a little bit of resistance, but like I said, I don't think it's like a massive amount of resistance. It's just a
right. I think that the first level that you're looking at is around this 92. Might find this resistance. Is that what you mean, like in here?
Yeah, if you like, I didn't get your screen on my screen there, but but yeah, it sort of goes back a little ways there too, and
that line right there, ish.
Yeah, yeah, and then underneath it too, it's sort of like those lines will like actually intersect. So it's an interesting chart even on the hourly.
Yep, yep, right in there. And interesting too,
Yeah.
that's where that volume at price, these are the volume at price bars, which tell
Hmm.
us how much volume there is at a given price, meaning that's where the buyers and sellers come in. So that
Hmm.
also tends to act as resistance and support. So it definitely has this range here that it's likely to trade in. If it gets up through that, then it gives it more potential, I think, to go higher. And this probably won't
Absolutely.
act as much support resistance at that point. But if you wait too
Yeah,
long as
yeah, I think
well, then it becomes not as good of a risk reward trade. So you just have to find that balance, right?
exactly.
OCN. Wow, that's a nice looking chart. So this was brought up by a coach and got sort of this cup and handle going here. Definitely a nice little curved J hook above the T line. Plenty of volume. I see nothing wrong with this chart there. Oh, and it's also rounded bottom breakout. So Rick Sadler talks about rounded bottom breakouts, which is when the ADMA crosses up through these other level moving averages, the 50, the 34, and the 21, and with the 200-day moving average above. The 200-day is the light blue. That becomes the target at 1774, which is a nice big move. There's a huge pocket of volume in here. You don't see a lot of volume at price in here. So really, really, really nice chart, actually.
Yeah, and there's a support level there to watch too. And I don't know if it's really going to come into play on this chart, but it does give you a little bit of an idea that there is some support underneath it. If you go back to like the January highs, you can just draw a support level. It's a little bit slightly descending, but going back to January, it pretty much hits all those highs on the stock.
Um, Going back to
Actually, I shouldn't say January highs. The highs of that gap down there. They're in mid-January where it gapped down.
oh, got you right
Yeah, right
here.
there. Yeah.
Mm-hmm.
Yeah. So it's got to come down a little bit. Well, that actually works too. So.
Well, it gives the basic idea, right? Nice. Yeah, nice high
Yeah.
there. Yeah, clearly it was been having, that's why it's sort of done this little J-hook pattern right there, consolidating right there. Probably can bring this up just a little bit more.
Mm-hmm.
There it is, probably to right there. So that's a really good place to watch. Where is that? About 10. This high over here, probably right. 1097. So basically, it gets through 11, it's going to 17, kind of thing.
Yeah,
But,
yeah. So you can see when it consolidates like that underneath right underneath the support level, and then it breaks out. It's great because it provides you a very clear area where to place the stop underneath on the trade. So it
absolutely.
gives you a very
Yeah.
favorable risk-reward trade.
Yeah, I agree. Really nice. Really, really nice looking chart. Hi, Ryan. Basically all the guys in the room here, Lance, whom you don't know, is saying hi, Ryan and wife, or thank you, Ryan and wife. And Coach is saying hi, Ryan. So if you'd like to say hi back. There you go. There you're on. Say hi back.
Hey.
Let's see here. What else do we
Hey,
have
there you
here?
go. Hey.
Any charts that you're looking at right now?
Yeah, one of them that's interesting to me today is MasterCard, MA.
That's a big stock. Oh, look at that. Not as big as I thought.
Yeah, yeah, big old stock. Well, you can see that consolidation there over the last couple of weeks. It's coiling pretty tightly, and it's had some earnings recently, so you got some pretty big shadows on that one candle there. But But overall,
There's
you could see
earnings there.
it may be attempting to break out of that range there.
Well, I'm definitely
And so,
see. Yeah, I was gonna say I definitely see a
well,
an ascending triangle type pattern, which
mm-hmm.
tends to be bullish. Really, like you said, really nice consolidation in here. Love all these moving averages are kind of scrunched up right below it. Nice support on the ADMA.
Yeah, and this is a trade where I would, if I was feeling a little bit more comfortable with this market today. I know it's up a little bit and all, but I guess we're looking at 12 points right now. I mean, that would technically be a pretty good day in the markets from what we've seen so far this year. But when you're just not getting much conviction to the upside or downside, and there's not a lot of technical improvements on the S&P 500, sometimes got to let a good trade setup like this pass, because I'd be tempted to probably pull the trigger on it right now with a close eye on that. What it does when it gets closer to 92, 90, 92.80, 90, $93 a share. If it can't break through that, then I'd probably just go ahead and take the small gains. But there's definitely a opportunity there in that stock that may not be taken advantage of, just because the market isn't really showing any technical improvements on the daily chart of the S&P. So sometimes you got to pass up good charts just because the market's not really giving you that much of a all is clear type of signal to go long on anything.
I completely agree with you, and that's basically the concept of my market timer. If the market's not supportive, so there's an 80-20 rule basically, right? Like when the whole market's going up, 80% of stocks are going up and 20% are going down, and vice versa. So I don't want to be on the 20 side of that 80-20 rule. I want to be on the 80 side. So I completely agree with you. And
right, because it's a lot harder to find that 20.
Exactly, right. I mean, it's your odds are much smaller, and trading profitably, or at least not losing money, requires keeping the odds in your favor. And so basically that, I agree with you, the same kind of thing. Like on days like this, for the last couple of days, I mitigate what I have, and I manage what I have, and just won't add anything until there's some more conviction in direction.
Yeah.
Yeah. Totally.
And then another one let's see here, ETFC, E-Trade.
ETFC, right on. Okay, another nice looking chart there. And also coiling. A lot of coiled charts in here. Definitely has a nice trend line right there.
Yeah, so it's bouncing off of that trend line, and then it's got some support that it's trying to recapture today, and it's support around this like 2860 level or so. So it's got some of that going as well. It's slightly below it, so if it could get back above it, and obviously in the process it would be staying above that rising trend line as well. You got two levels of support underneath it that would provide a good risk reward opportunity for a move to in the near term. Because and the brokerages have been pretty good so far. You look at Charles Schwab, CHW, that stock has been doing pretty good. ETFC has been pretty good. So a lot of those brokerages and financials have been doing much better than the broader market as well.
Yeah, because those those little robots and algorithms, they do okay in the chop.
Yeah.
They do better than we do.
You know what though? I was thinking about this because I saw a Charles Schwab commercial. I think it was a Charles Schwab commercial that said, we got these robotic portfolio managers and everything, and all I can think of is that if they're so much better, because it's almost like they're touting them as being better than humans. So then I was like, well, what does that say about all of your employees basically?
Yeah, right.
If a robot's better, it's like, how am I supposed to feel if I'm a person that's putting money with you guys to manage, and you're saying that a robot that some guy created an algorithm for is better than all of your brain power, and basically managing the portfolios of their clients. So
yeah, it's pretty wild actually. It is interesting. I don't think that those portfolios, interestingly, they chop us out of stuff, but I don't think they actually make a lot of money. I think they have small gains because they're large funds, right? But they do sort of push us in and out of the market, unfortunately, to create this poor conditions, as it were. I wanted to point out too on your ETFC chart here that this resistance line that's become support up here, right, that you were pointing out, coincides with the ADMA. So really interestingly, it's trying to get through that support line, and that support line is also the ADMA. So if it gets through that, I think it definitely would be a nice looking trade, and that may not be today, or it may be not even tomorrow. It might be in a couple days, and at that point, we might have a market, because every day is different, and it's possible that we might get a market that's actually trending as opposed to chopping, and we might have a better situation to get into something like that. Might offer a better entry.
Absolutely.
When it pops through that.
Be nice.
Yeah, it would be nice. It's been a while, actually, right? It's been all year. It's kind of been.
Yeah. And you wonder too if it would be better for like the near term for us to maybe see this summer like a 10-15% sell-off that you can get short on, make some of the quick profits, because the profits always come quicker in a sell-off than it does in an uptrend. But then as a result too, it would really flush out a lot of buyers, and then create like a new baseline for the market to grow from. And I think if that happened, I think there would be a lot of opportunity over the summer, obviously, on the sell-off, and then perhaps in the fall time you would have a great opportunity for like a 10-15% run higher in equities as well. So
I totally agree with you.
Sell-off, it could be some effects.
Yeah, I totally agree with you, and I often say that I like a good correction, because a good correction sets us up for another good rally, even if I'm not shorting in the correction, because the time frame is a little too quick, can be a little too quick for me. I can take some quick shorts in it, or I can wait it out. But at least it happens, and it's not that long of a wait, and then it sets up for a nice rally to the upside. So I totally agree with you. I prefer a good sell-off that can be traded, because then you have a trend. Whether it's a trend down or a trend up, I don't care, but give me a trend. Without one, it's kind of hard to join in. Can't join a trend if one doesn't exist.
Right. And the ultimate example of all of that is 2008, when we had the huge sell-off, and then the six-year bounce after that. So
totally.
I don't know if it's called a bounce anymore, but it's been quite the rally since then.
Yeah, I don't think that's a bounce anymore. I think that was an actual rally in an actual bull market. It did really, really, really well. All right, what do we have here in the room here? Anybody saying, looking for, I guess XIB must be doing well, because I know some folks added it with me yesterday and this morning as well. So nice big green candle happening there, so that's really nice to see. G Pro Shorts, please stand up. What does that look like? Oh, that's a nice looking chart. So this was kind of starting to look nice this morning in here. I have these other lines in here, but it's interesting because you can see that again, that resistance that becomes support in there, and it's bouncing off of that and through that now. Has the 200-day moving average up here, so it is a rounded bottom breakout. So that's a pretty decent target of 57.15. That's a nice 20% move. So I guess some of the Raj, are you trading G Pro? You bought it this morning, right? And you're doing really nicely. So congratulations. That's a really nice trade. Good for you. Another one, glue. What did you say? Glue looks tasty. Please do glue. Okay. Oh yeah. So this was this earnings, I guess, on glue. Is this one you follow at all, Ryan?
Not glue per se. No, that's that might be a little too risky for my blood, especially for earnings.
For your blood? Well, no, definitely not for earnings, but it does have a lot of volume. Like it averages at over 2 million shares. $6 stock. It did take a big. I think this was an earnings jump where it popped up here, and then it it made this move higher, and now is consolidating down to the T line, the red ADMA there, and put in a little doji candle yesterday, and you have this bullish candle today popping up off of it. That becomes your current support line here. So pretty easy risk reward on this here with using the ADMA, which kind of coincides with this support here. Obviously, you don't want to lose that because then you have a gap that it's likely to fall through. But plenty of volume, so it should be easy to get out of if you need to. With the stop below 642, I think that's definitely tradable. What makes you feel that it's risky there, Ryan?
You know, I think it's a long-term relationship with this stock. I've seen it over the years and everything, and it's probably more of a personal preference that, you know, I'm not overly crazy about the stocks under $10. I always try to say, and that's not to like fault people who do trade it, because there are strategies, those types of trade and everything else.
Sure.
For me, I can never get like a stop loss usually that's manageable and for my style of trading, because essentially, like for my stop losses, I like to keep my stop losses under 4%. That way I can keep my risk reward ratio intact. And like something like glue. So if I was to trade glue, let's say I was going to get in here at 668. For me to probably make that trade, I wouldn't want to help hold it any longer if it got down into that gap or the lows from, let's say the lows from the 30th of April. So then, you know, it's like 630 stop loss.
I agree with you. I mean, I think it could even be, you know, that the ADMA is 641, so you could actually do a 637, 634 stop loss, and that's only about 4%.
4%?
Yeah, about 4% just to do 637, 30 cents on 667, so about 4%. So for me, I try to keep it, I always say less than 5. I think, you know, everybody has their individual risk tolerance. I say less than 5. So this, for me, is a viable stop loss right below that support / ADMA level. But I agree with you. I often, you know, folks will point out stocks that look great, but when I go to say, okay, where would my stop be? If it's too far, I don't give it the time of day. So I completely agree with you, and I get that. And I also have stocks that have not treated me well over the years, whether it's because they were too low priced. I usually say under $5 is what I, you know, get nervous about versus 10. But certainly there are stocks that they go into, you know, if I get emotional about a stock at all, ever, because you know, it hurt me for whatever reason and it caused an emotional trigger in me, then I put it into what I call my penalty box, and I don't either never trade it again, or certainly, you know, like you will be like, you know, that's just not a stock I like to even look at, because
there's a few of those out there for everybody, I think.
I think so too. Everybody has them. Okay, another one I was asked to look at is FCS, also for Lance, no, for Raj. So Raj, this is kind of cool actually. This has, first of all, you have a nice level of support here. Let's hold the line. Nice level of support here, as well as the, oh come on, stop that. As well as the 50-day moving average, right in there. That's the darker blue line for me. This pattern is interesting because it has these sort of rolling over looks, but it's staying above all of these moving averages that have been consolidating really tightly. And so you could really look at this in two ways. You could say, okay, this is kind of like a scoop pattern with a straight line here, and then it scoops down to this support level and comes back up and is consolidating above these moving averages. Or you could say it looks like a sort of a rolling top pattern, or a bearish, like an M-type pattern, or you can even say that this is possibly a little H here. So you have this definite line of resistance here that it probably needs to get through. But because it has so much support here, I'd say risk reward, you can put a stop below the ADMA that's at 1916. The stock is currently at 1937. Even if you give yourself, 2-3%, you can put that a little bit lower, put it below 19, put it at 1890 something, and have a decent risk profile. And then if and when it does pop through that resistance level, I think that it can do really well. Looking at this, one of the things I usually do, Ryan, is I will look at a chart on the daily, and then I'll look at it on the weekly. I like to remove these lines when I do that. So looking at this on the weekly, definitely in an uptrend here since this October bottom, and looks like it consolidated down in here once, creating a J-hook pattern, and is consolidating again, possibly setting up another J-hook pattern. So would love to hear your thoughts on this as well. Have I not been, all this time have I been on you and not the chart? My apologies. I think that I wasn't showing the chart. So, let me just go over that again real quick. Straight line, scoop, could be a scoop pattern, has this level of support here that goes back to October. Also has these smaller levels of support and resistance, definitely a level of support in there. That was once resistance, right? Kind of a mattress of support, and lends also well to that volume at price. Then we have this top line that's clear resistance. All of these moving averages below, the ADMA giving a very easy risk profile, probably needs to pop through this top line here to get on that, way up from this J-hook pattern that it's putting in, but very low risk because it has the ADMA so close by, right, at 1916. Currently the stock's at 1938. You could put a stop right below the 19 level, and that would be a really easy risk profile. Going quickly to the weekly, since I mentioned it, clear uptrend here that it's been following since that October bottom. J-hooked pattern here, wave 1, J-hooking again, wave 2 on that weekly chart. It gets through that resistance. I think it can definitely do well and create wave 3. Okay, so now that I've repeated all that quickly, hopefully that didn't get lost on anyone. Would love to hear your thoughts on the FCS as well.
Yeah, no, I'm in pretty much complete agreement with you on it. I think the key level there on FCS is going to be that descending trend line off of the April highs. It provides a clear level of resistance that definitely needs to break. I think getting in beforehand, it improves your risk reward, obviously, but I don't know if you're really going to be going into it with any kind of edge on the trade. So, yeah, definitely waiting for it to, I don't know what the exact price is going to be, but somewhere like around 1990-ish, I'm guessing, or 1980-ish.
1980-ish.
Yeah, so somewhere right there. Yeah, so waiting for a break above that level there. I think that's what you have to do as a trader is to, stay patient and let the price action come to you, and then when it does, there's a good breakout opportunity at that point.
Yeah, I agree. It's funny, one of the things we talk about that, sorry, let me get back to me here. We talk about, I have to take the glasses off because they're not non-reflective. We talk about the difference between, you have easier risk when you get in lower, closer to your support line, but you may not have as much of an edge on the trade before it breaks out. So those are things I think that we take into consideration, how the overall market is doing, what the volume profile looks like. And something like this, when it's red today, kind of really makes sense to say, maybe it's having trouble getting through that resistance level. The overall market has not been supportive, so it makes sense to wait. But there are times when I can see stuff that's really bumping up against a resistance level, and I'm like, it's going to break out any minute, and if I wait till it breaks out, my risk is going to be more than I want it to be. So it's a balance there, I think, in finding something we talk about a lot.
It's hard because sometimes you want to even justify getting in early if the chart looks good enough just so you can keep that risk reward favorable. But then you always hate yourself for doing that if the stock doesn't play out in your favor and would never have confirmed in the first place. But so it's sort of like what you say. It's sort of like a balance between the two approaches that you have to teeter the line on.
Right. Waiting for confirmation or trying to get in before you lose that extra move. Another one that, so I think I've got messages from Goofy Golf. We call him GG in the chat room. Let me come back here. He's a wonderful, wonderful trader, and we're actually really, really lucky to have him in the chat room. I don't think you've ever met him, but he's a wonderful trader, and he is putting up some stuff in the chat room, and one of them was GPro, which Raj also asked for, so we looked at GPro. So I don't mean to ignore you, Gigi, because we all love you, and we're going to take a look at W-Wave, which Gigi has brought up here. It's hard to keep up with all this stuff, guys, so I'm doing my best here. I'm sorry. I'm trying to answer the questions in the chat room, and this is my first time having a guest on the show, so I apologize if technically I'm a little bit off and struggling to sort of keep up with everything, and I want to make sure that I include Ryan on all the conversations here, and so it's a new thing to juggle, so I apologize for right on.
Great.
Right on. Okay, so W-Wave, let me get the glasses on so I can take a better look at this. So this is the daily chart. Definitely has been consolidating this up move since February, early February. Yep, that's when it came from. Then put in what looks like a descending wedge here. Right. I just need to go back and actually see what Gigi is saying about it. Because whatever it is, it will be helpful. And unfortunately, I can't put your charts up, Gigi, because I can only put up. I would have to do yet another screen share, and that's hard to do. But I am looking at the chart that you created. I wonder if there's a way I can do that. I wonder if I can go to the chat room. Pull up the. I know I might be able to do this. Give me a second here. See if I can pull up Gigi's chart so we can all look at it. Bullish engulfing forming is what Gigi has said here. So going back to here and going back to the screen share. Can I only screen share once? I think I can only screen share. Wait, nope, not working. Not going to work. So we'll just have to look at this from here. Bullish engulfing, definitely a bullish engulfing. We have this descending wedge in here. Needs to get above this downtrend line, which also coincides with. Are we looking at that? Are you all seeing the chart there? Do you see the chart there, Ryan?
Sure can, yeah.
Okay, great. So descending wedge in here, putting in a bullish engulfing. It has the 50-day, the dark blue line moving average just above it, and it's not getting through that. And then it has the 80 EMA, the red, just above that. The yellow is the 34 EMA. So lot of beautiful potential here. Clearly, it's trying to, change this pattern that it's been in, but it's not there yet. It needs to get through those levels of resistance, which include those moving averages and, clearly this downtrending line in here. Definitely worth watching, especially when we have a market like we have now, where we're waiting it out and looking for stuff to trade when it does shore up, and it will eventually. Just I think we've been talking about a lot about how this market's been so tough to trade, and it's been all year. but I have no doubt that it will eventually trend again. We've seen this before. Sometimes it can last 4, 5, 6 months, but it will eventually trend again. It will, either because it has a big pullback and then it can rally, or because it just has consolidated enough by going sideways for long enough that it's ready to rally again. Market stocks consolidate in two ways. They can go down or they can go sideways. And if they go sideways for long enough, then they can eventually rally again. Maybe it needs to go down, maybe it needs to rally. We don't know that. But I have no doubt that it will eventually trend again. Do you agree with me, Ryan?
Oh, absolutely. I mean, yeah, definitely two different ways for it to, correct itself, like you had just said there, and the market action really, it's kind of similar to 2007. There was a lot of time of consolidation throughout that year in 2007, and then lo and behold, we have the dump in 2008. So I'm not saying that we're going to see the same kind of dump. Maybe we will, maybe we won't. But just to be able to say though that backing up your point that the consolidation happened, but eventually there was a trend that unfolded.
Right, exactly. And so that's why when I point out like charts like this that aren't ready now, but that look like they may be setting up to be ready, are great to keep an eye on while we wait for the stock market to show its hand. So I think that it's definitely a chart that's worth watching.
And looking at that chart on the 5-minute, I'm just watching it on my own charts too. It's got kind of an interesting.
You look at 5-minute charts.
Holding there.
I never look at 5.
Intraday, yeah, I don't.
I sometimes will look at a 10-minute chart intraday. 5 minutes is just too small for me. And so you can see the trend better, I think, on the 10 than the 5. Just for me, you definitely see that. I mean, because look at this move that it's made today, right? And now it's kind of all these dojis at the top here, and then I don't know if it's going to be rolling over or if it's going to just pull back a little bit to consolidate this move a little more before it goes higher. Definitely worth watching when we go to the hourly. Really, I think that's really an interesting chart on the hourly, because you definitely see this support line here.
Yeah, that's a huge level right there that it has to push through.
Right, that it has to push through. I totally agree. And so it's clearly finding resistance there, but not necessarily rejecting off of it hard. So definitely worth keeping an eye on. What does it look like on the weekly, I wonder? Well, it's just a little too tight to notice it on the weekly. It's just a little bit of it's also sort of a descending wedge here on the weekly. Lost that 8-week EMA, but not really anything to write home about. It might be putting in, oops, I did not mean to do that. It might be putting in on this weekly chart. Come on, back to the weekly. Hello. Weekly. Oh, it's just really doesn't want to do this, does it? Okay. I have to play around here for a minute. Get it back there. Okay, on this weekly chart, I noticed that this week's candle is starting to look like a doji. So it, could become like a Morningstar type doji bottom, and that again would be something to watch into next week in order to see that. So I really enjoy having stuff that looks like it's moving a certain way, and that's good to watch over the next week to see if it's something that will make a good trade when the market shows its hand again. So awesome! Thank you so much, Gigi. Thank you for sharing the charts. I wish I could show them in here, but unfortunately I can't. One more, getting request for SGen. So I'm not a drug trader. I don't do drugs, as folks know. Every once in a while, they're like, okay, everybody's making money on drugs but me. I'll try it, and then of course, inevitably, it doesn't work for me because drugs just don't like me, and I don't like them. But looks like it's breaking out of this little bit of resistance line here.
That's a nice break right there.
Yeah, it really is, right? Like, because it definitely
be able to trade it. Actually, you can even connect that line going all the way back to the August highs, it looks like.
Yeah, I think you are, or even further actually.
Maybe, maybe not. Oh yeah, yeah.
I have to move this a little bit. It's interesting because when I do that, look what happens. When I
Hmm.
pull out more, I think we'll probably really see that on the weekly chart. Suddenly, where it is a new level of resistance. So and that's one of the great reasons to look at multiple time frames, because this definitely looked different when we were looking at that daily chart. It looked like it was really breaking out, but when we pull out on the weekly chart, we see that it's still just right bumping up right against that level of resistance. It's a really strong candle. It may very well just push right through it, but it's interesting to see that definite level of resistance on that longer time frame, and you have clear support down here along with this 200-day or 200-week, actually, in this case, moving average. Clear support down here and a clear line that it needs to get through there. When we pull out to the daily chart, or rather when we zoom into the daily chart, then we have a different line here because we have those two levels, and that it has broken out of. But I'm not sure that it doesn't need to break out of this top line here. I think that it probably does, because that longer trend is likely what will give it the most resistance. There's definitely a little line there that it has broken out of, but it's definitely bumping up against that top line. I love the way all these moving averages are so tight. They're so coiled. And it has broken, it did this sort of rounded bottom with dojis at the bottom and has broken up through these moving averages. So a lot of bullish signals in here. If you're getting in here, your risk it's less, it's 36.14, that's a little more than $2 on an almost $40 stock. So it's only about 5%. But if you wait till it pops through, then you're going to have, I think, more than 5%. So that's one of those ones where it's you have to decide if you really, really like it, if you really, really believe in it, then it may be worth your risk reward. For me, the fact that it's drugs alone will keep me from really being interested in it, and I think that the risk reward is not great until it pops through that top line, and then you use that top line as your support, resistance turn support level, and you can use that as a stop. Thoughts? Do you do drugs, Ryan?
I definitely no, no, I don't do drugs. No, no, none of the pot stocks, none of the S-gen like biotech stocks. The reason, and it's not that I haven't been tempted or anything else. That the biggest issue with the biotech stocks is the overnight risk. I mean, you see, it's almost like a daily basis. You see one of the biotechs, and sometimes it's a pretty big name biotech that it can happen to. There's always one that gaps down and just fools everybody. And it's not like it's a typical like 2% or 3% gap down. Some of these gap downs are like 30 and 40%. So you can spend a long time trying to dig yourself out of that kind of a hole if you get caught in one, even no matter what kind of success you've had in the biotech. So I know it's the real trendy thing to be trading right now, and a lot of people love it. But I don't like the risk on them.
I agree with you. Too volatile for me. Too much risk. I think that there are some that are just these huge companies, but then they don't move that much anyway. So either way, I don't think they make great trades. But some of the big companies I think are less risky. But again, if you have something that only moves, this is going to move 2 to 3%. Then what? How good is your risk reward at that point as well?
Exactly.
So yeah, I agree with you completely. Well, I don't have any more requests for charts in the room that I can see. Is there anything in particular more that you would like to look at?
No, I'm pretty good. I'm just basically here today waiting for this bounce that we're seeing to play out. I don't have a lot of confidence in the bounce that we're seeing today, so sitting on my hands waiting to see if there's going to be any afternoon sell-off, or if the bulls are reinvigorated to try to push the market back to all-time highs again. I think that remains to be seen. But at the moment, if I don't know, I'm not going to try to make any ill-fated guesses.
Yeah, no, I completely agree with you. I feel the same way on days like this. It's a great day to do a show like this because I don't feel the need to be watching stuff too much. So yeah, I completely agree with you. I like to sit on the sidelines and just see how things are going to play out, because I would rather preservation of capital is my #1 priority, and then growing that capital is after that. But it goes back to what we were talking about earlier, right? Folks feeling that need to constantly be growing, rather than being concerned with preserving when the market is volatile and then they get into trouble. So great minds think alike, and we're on the same page there. Yeah. It was great having you on today. You look amazing. Can I just say, you look 10 years younger from the last time I saw you. So whatever you're doing, keep it up. You look great.
No, thank you very much.
Well, my pleasure. If you wanted to remind folks again, shareplanner.com. Folks want to follow you on Twitter. I think it's at SharePlanner on Twitter.
At SharePlanner.
And they can send you messages through your website if they want to get a hold of you and ask any questions.
Yeah, best way to do that is Ryan at shareplanner.com. So it's all pretty easy and straightforward. On Facebook, it's facebook.com/SharePlanner. So common theme of SharePlanner throughout all of those.
Right on, right on. I have a Facebook page now too, and I forget to even mention it. I probably should mention it more, but I forget to. I do have the facebook.com/TheTradingWife as well. And I am TheTradingWife, TradingWife.net, at TheTradingWife on Twitter, TheTradingWife at gmail.com for email. I want to thank Ryan for joining me today. By the way, I used to, a few years back, I used to work out of Ryan's website, and so I did some work on there with him, and so we've known each other for a few years, and we've managed to keep in touch and talk about markets, and so it's been a pleasure having you on today, Ryan. Thanks for joining me today. I really appreciate that.
Absolutely. Thanks for having me.
It's my pleasure. All right, so I think we're going to call it and say have a great day, everyone. Happy trading. Remember to keep your risk reward well in good ratios, and hope you have a great day, everyone. Take care. Thanks a lot. Bye-bye. Oh, and thanks to BTFD TV again for providing the venue so that we can do these shows. Have a good day. Bye-bye.